Welcome to Video Creator, where we explore the hidden dynamics of finance to help you build a stronger and wealthier future. We often believe that holding on to a large pile of cash is the ultimate safety net for our unpredictable lives today. This feeling of security is actually a dangerous illusion that might be slowly destroying your hard-earned wealth without you even noticing. There is a silent enemy working against you every single day, quietly eroding the purchasing power of the money you save. This enemy is called inflation, and it ensures that the money you keep under your mattress is worth less tomorrow morning. Time is not on your side when you hold cash, because the economic machine is designed to inflate prices over time. You might feel safe seeing the same number in your bank account, but that number buys significantly fewer goods each year. The cost of living is climbing constantly, and your stagnant cash savings are struggling to keep up with this relentless pace. Let us look at a visual example of how your purchasing power has dramatically shrunk over the last decade of inflation. Consider the price of a simple burrito lunch, which used to be a cheap and affordable option for almost everyone daily. That same meal now costs nearly double what it did just a few years ago, yet your cash balance remains unchanged. This applies to larger purchases as well, like the soaring prices of new vehicles that we see in dealerships today. Inflation is the invisible tax that you pay for the privilege of keeping your money sitting idle in a bank account. Banks offer you a tiny fraction of interest, often around 0.5%, which is practically nothing in reality. While you accept pennies from the bank, you're missing out on the massive wealth generation happening in the market. This is the concept of opportunity cost, which is the potential gain you sacrifice by choosing safety over smart investing. The S&P 500 has historically returned about 7% annually after adjusting for inflation, creating real wealth for patient investors. Imagine your money as seeds that could grow into a forest, but instead you leave them in a dark drawer. Money left in a traditional savings account gathers dust figuratively, losing its vitality and strength with every passing fiscal year. We need to shift our mindset from hoarding cash to deploying capital efficiently to work hard for our future goals. So what is the solution? It begins with understanding the golden rule of liquidity versus investment in your personal finance. Financial experts recommend keeping only 3 to 6 months of living expenses in your easily accessible bank savings account. This amount acts as your emergency fund, a financial shield designed to protect you from unexpected life events and disasters. Whether it's a sudden car repair, a medical emergency, or unexpected job loss, this fund has you covered completely. A common mistake people make is confusing their total monthly income with their actual necessary monthly living expenses. Your emergency fund should be based on what you need to survive, not on what you earn or usually spend. Focus on the essentials like housing, food, utilities, and insurance when calculating this critical safety number for your bank. Let us take a moment to do the math together so you can calculate your specific emergency fund target today. First, add up your rent or mortgage, groceries, utilities, and minimum debt payments to find your baseline monthly cost. Multiply that baseline number by 6 to determine the absolute maximum amount of cash you should ever hold in savings. This is your ceiling, and any penny you accumulate above this limit is money that is being wasted. If you discover you're holding significantly more than this 6-month cap, you are currently losing money to opportunity cost. Think of excess cash as stagnant water that could instead be flowing through a turbine to generate power for you. Every day you wait to move that excess capital is another day that inflation takes a bite out of it. You need to upgrade your money from being a passive observer to an active participant in the global economy. The strategy is simple. Secure your safety net first, then immediately redirect all overflow into wealth-building investment vehicles.
We will now discuss exactly where that excess money should go to maximize your returns while managing your risk. The most recommended destination for your surplus cash is low-cost index funds that track the total stock market performance. These funds allow you to own a tiny piece of hundreds of the largest and most successful companies simultaneously. Instead of betting on a single horse, you're betting on the entire race, which significantly lowers your risk of loss. This approach is not about getting rich quick, but about building sustainable wealth that withstands the test of time. History shows that over long periods, the market goes up, rewarding those who stay invested through the ups and downs. You should use a method called dollar-cost averaging, which means investing a fixed amount of money at regular intervals. This strategy removes emotional decision-making and ensures you buy more shares when prices are low and fewer when high. Automation is your best friend here. Set up automatic transfers so your wealth grows while you sleep soundly at night. This triggers the compound interest effect, often called the eighth wonder of the world by financial wizards and geniuses. Your returns start earning their own returns, creating a snowball effect that accelerates your net worth exponentially over decades. The difference between a stressful retirement and a comfortable one often comes down to how you managed your cash today. Do not let the fear of market volatility paralyze you into holding cash that is guaranteed to lose value. Markets will crash and correct, but they've always recovered and reached new heights eventually, given enough time. With a proper emergency fund in place, you can ride out these market storms without panic or financial stress. Your emergency fund is the key that unlocks the ability to invest aggressively without endangering your current lifestyle. Take action today by reviewing your bank balances and calculating exactly how much cash you're currently hoarding unnecessarily. Follow the steps. Calculate your monthly expenses, multiply by 6, and identify every dollar that exceeds that safety number. Create a plan to move that extra money into the market gradually over the next few months using dollar-cost averaging. You'll feel a new sense of control and purpose knowing your money is working as hard as you do. Stop letting inflation eat your lunch and start building a fortress of wealth that will protect you forever. Financial freedom is not about how much you earn, but how effectively you manage and grow what you keep. Plant the seeds today, nurture them with consistency, and prepare to harvest a bountiful future for yourself and family. Educate yourself continuously, stay disciplined with your strategy, and ignore the noise of short-term market fluctuations and panic. Your financial portfolio should be like a mighty oak tree, deeply rooted to withstand storms and growing steadily upward. Remember that cash is liquid for a reason. It evaporates easily if not contained within a solid investment structure. Investing is the only reliable fire extinguisher we have to put out the flames of inflation burning our savings. Looking back years from now, you'll be grateful you took the step to move away from cash hoarding. Watch your net worth climb as the power of the global economy works in your favor day and night. Balance your fear of risk with the understanding that the greatest risk of all is doing absolutely nothing. Small changes in your financial habits today create massive ripples of positive impact for your future financial well-being. True wealth is not just numbers, it's the peace of mind to enjoy life with those you love. Release your grip on cash to let your wealth fly free and reach heights it never could inside a vault. Commit to this strategy, write down your plan, and execute it with the precision of a professional money manager. Patience is your superpower. The longer you stay invested, the more powerful the compounding effect becomes for your portfolio. Investing is a marathon, not a sprint, so pace yourself and keep your eyes on the long-term finish line. You have worked hard for your money. Now make sure your money works just as hard for you continuously. The economy is a vast engine of growth, and you deserve to claim your share of the prosperity it generates. Shift your focus from merely saving pennies to growing dollars through intelligent and calculated investment decisions starting right now. Overcoming the inertia of holding cash requires effort, but the momentum you build will carry you to financial success. The principles we discussed today are timeless truths used by the wealthy to maintain and grow their vast fortunes. Pass this knowledge on to the next generation so they can avoid the trap of inflation eating their savings. Let the fog of financial confusion lift today as you take clear, decisive steps towards a better investment strategy. You have the power to change your financial destiny by simply changing where you choose to store your wealth. Transform your wallet from a graveyard of depreciating paper into a launch pad for future opportunities and lasting prosperity.